Good afternoon, and thank you for joining us today. I want to talk about what in-house counsel need to know about insurance. And, to kind of, for those of you who are more graphically inclined, I thought this might help, the intersection of insurance concepts and the law, and we're going to talk about both of those as we go through here today. And hopefully we'll share some things that can help you evaluate these issues as they come across your desk. All right, so just so you understand the perspective here, I'm Vince Morgan. I lead Bracewell's insurance coverage practice. All we do is represent corporate policyholders, and it's a full-service practice where we help clients everything from placing coverage to navigating the claims process and then dealing with coverage disputes if they arise with their carriers. It also runs the gamut of sectors and coverages, everything from property insurance and business interruption to D&O insurance and general liability insurance, pollution, cyber, reps and warranties, all of it. Anything that our corporate clients need from an insurance and risk management standpoint concerning legal issues, we're here to help them work through that. And sometimes it means working on indemnity issues, sometimes it means working through captive insurers, again, any of these kinds of issues. So just wanted to give you sort of some sense for our practice here at Bracewell, so that helps you as you listen to this presentation. All right, now Hollywood has an image of what insurance lawyers are. It's Tom Hanks. This is from the movie Bridge of Spies. And he was an insurance coverage lawyer in Manhattan, was asked to represent a Russian spy that we captured and then later traded to get our U-2 pilot back. Now, it's a great movie, so if you haven't seen it, I encourage you to take a look at it. It's a nice Cold War sort of spy thriller. But after he was done saving the world, he went back to practicing insurance law. And so with any luck, hopefully some of what he dealt with we'll talk about today. All right, so kind of give you a roadmap of what we want to cover here today. Here's the introduction. That's this part right here. You haven't missed anything yet. And then we'll talk about why words matter, right? And if you doubt the importance of that, I give you the political debate in America these days. It tells you, just how important it is to be careful about your words. Getting it right when placing coverage, it's like lots of things. If you get it right from the start, it works better down the road. And so we'll talk about that. We'll go over some key commercial coverages. We'll talk about the claims process, and then some additional insured issues, which are, of course, very important to lots of our clients. Some of them give additional insured rights to their counterparties. Some of them get additional insured rights from their counterparties. Some do both, and so we'll talk about that as well. A couple hot topics. It is April of 2021, and for those of you here in Texas, you probably remember the winter storm we had in February. We're dealing with claims from that, so we'll talk about that a little bit. We'll also talk about some other key topics of like D&O developments and then reps and warranties coverage, which are coming up for lots of our clients these days. And then finally, if you're willing to sit through this presentation for an hour, you should get something for it. So we'll have 10 takeaways at the end that you can keep and treasure forever. All right, why the words matter. This is a nice quote. It's from the Delaware Supreme Court, and this is the first sentence in this opinion, and it kind of has a paragraph, but what it does is explain why insurance is a different kind of contract, right? Everybody kind of understands that if I hire someone to come and paint my fence and they don't show up, and then I have to go and hire someone else to come and paint my fence and it costs me $200 more, that the law would say that is a $200 damage and you can recover that from the first party that failed to perform, right? And so that's a pretty simple concept of, of cover, right? And but the problem with insurance, it doesn't work that way, because if you hire an insurance company to protect you and then they fail to do it, you can't go out and get some other insurance company to step in and do that job for them. Right, and we call it the principle of fortuity, but the sort of standard line is you can't insure a burning house. So after a loss is already in progress, after it's begun, after it's already occurred, no other insurance company, there are a couple of exceptions to this rule, but generally speaking, no other insurance company will come in and fill that void, and that's why insurance is different. And so the law treats these, they are contracts, but it's a special relationship. And the disparity in bargaining power and some other factors that means that it gets treated differently in the law than ordinary contracts. We use ordinary contract principles to interpret the language and things like that. And you have standard concepts like breach of contract and things like that. But again, it's treated differently because of the different nature of it. One of the other things This is a recent Texas Supreme Court case, and it said, we note at the outset that the insurance claim process is inherently adversarial. The adversarial process begins as soon as a claim is filed and ends only when the resolution of the claim is finally determined and accepted by the parties. I actually don't fully agree with this. I think by and large, 90+% of claims just get made and paid without any real issues. Maybe a few things at the margin here and there, but by and large, they're paid very cooperatively, they're paid promptly, they're paid fully. It's only a really pretty small subset of them where we run into coverage disputes and things that run into trouble. Now, but the Texas Supreme Court's point, I think, was focusing on those claims that get off base early, and that, I think, is kind of maybe what they were getting at. All right, and finally, I leave you with this. This is an old English case, but it helps us here as we think about the importance of words and getting it right and all those things. Most of the disputes in the world arise from words, and if you have any doubt as to the veracity of this comment, I give you the American Political Dialogue Today. Just kind of keep this in mind as we go through our presentation here. All right, so you heard me talk about getting it right when placing coverage, and a lot of our clients come to us after a claim has happened and they're looking for help, and that's great. We're obviously happy to help them. Some of our clients come to us earlier on and say, look, I'm renewing my D&O coverage, or we're buying cyber insurance for the first time. Can you help us work through these issues? And we're delighted to do that when clients come to us and ask us to, get involved in this. And again, we're not insurance brokers. We're not here to comment on, is this a good deal? Is this a fair premium? Is this the best coverage you can get? I mean, those are questions that really aren't legal, but what we can do is help clients think about things. If you had this kind of claim, how would this policy wording respond? How would courts interpret this? What case law is there? Those are the kinds of questions we can answer and maybe shed some light on. So this is a little bit about, let's just start at the beginning, how insurance policies are built. They all sort of more or less have the components on the left side of this slide. These 6 things, they start with a declarations page. It tells you, who the insured is, who the insurance company is, generally what the limits are, what the policy period is, things like that, right? There are insuring agreements. These are essentially their promise to insure you. There are exclusions. They say, look, we cover this, we don't cover that, right? There are definitions because they need to explain words that they use. The law says that if you define it, they will follow the definition. If you don't define it, then they'll use plain English, which in other words means look it up in the dictionary. But it's important to think about definitions. There are conditions, right? You have to give notice after a loss. You have to cooperate with carriers and other things like that. And these are the conditions. And then finally, there are endorsements. Endorsements can do many things. They can add coverage. They can add an insured. They can change a name. They can exclude coverage and introduce a new exclusion. They can just change some random fact like an address. They can do all kinds of things. And all it does is say, look, we're changing something in the policy, and then you got to figure out exactly what it does. And sometimes they can do several of these things all at once, right? And so it's important to look at it. And then the slide on the right, the picture, kind of tells you this is not, thankfully, not a stop sign near my kids' schools, but instead just sort of tells you about how some of these policies work. Sometimes it's red, yellow, green. You got to figure out exactly which way, what you're looking at to figure out what color that light is. And so it seems a little, sometimes you just can't figure out at all, in which case the policy probably is ambiguous, in which point it should be construed in favor of the insured and favor coverage. But usually you have to kind of sort through all these issues by looking at these components and trying to figure them out. Now, you might be looking at, say, you're looking at a D&O policy as opposed to maybe a workers' comp policy. Well, they all have these components on the left-hand side. Sort of like a Ford truck looks like, maybe a Toyota sedan. They both have 4 wheels. They probably have a steering wheel, an engine, brakes, transmission, that kind of stuff. And these are the same components. Now, they look very different, but if you break them down structurally, you'll see that they're all kind of built the same way. All right, so some key commercial coverages. There are lots of them. There are literally hundreds of types of policies that you can buy for various different things. And to list them all would be foolish because it would be microtext and it would probably still be incomplete. But to give you some sense of the things that the companies that we work with tend to buy, here are some pretty common ones. The main first-party coverage that clients buy is a commercial property policy. It typically includes things like loss of or damage to property. That's kind of the main point of it. It covers business interruption. It covers what's called contingent business interruption, which is, it's not when your stuff is damaged and you lose revenue, but if your customers or suppliers are damaged and that leads to revenue impacts on your end, that can be covered. Service interruption is when you lose utilities. So for those who are in Texas, remember the winter storm, right? You lost services, right? If you are in Houston, you lost water probably. Just about everybody in Texas had power. I think I saw a statistic, it was something like 70% of Texas went dark during those 3 coldest days. So, service interruption is on there. Ingress, egress is when you are physically either prevented or impaired from accessing a property. The textbook case is from North Carolina called Fountain Power Boat. It had one road that led into and out of its boat manufacturing facility, and the road washed down during a hurricane. And they said, yep, that's ingress, egress. Little odd because it's a boat factory. You figured there might have been another way to get in and out of there. But nevertheless, court held that was a covered ingress, egress claim. Preservation and protection of property. These are, we'll talk about this when we get into the winter storm, but this is costs that you spend to avoid other losses, either in the form of protecting property or avoiding a business interruption loss, and they come in various forms, but things like that. They're all sort of variants of sue and labor provisions from old maritime law, where if the ship was starting to list, they could throw cargo overboard to save the ship and the crew, and then any cargo left, and the insurance company would say, look, we want you to have the right incentive, so go ahead, jettison what you need to jettison, save the crew, save the ship, and then we'll pay for that loss, right? And it sort of, again, has sort of carried through to modern day. Claim preparation expenses is another thing. One of the first things when we get called by a company saying, we'd like to hire you to help us with our, hurricane claim or some other large property loss, one of the first things that we say is, great, let's go get you some help in the form of accountants. Usually their fees are covered. And the answer is the reason why is because insurance companies sort of want somebody to help them understand what your claim is, and they're willing to pay for it. So usually there's coverage for that. One other coverage, it's not listed here, but it is important, is civil authority. This is when the government tells you that you can or cannot access a certain property, or you can only do it under certain conditions. So it's like curfews or some of these COVID rulings about you could only have 25 or 50% occupancy, things like that. That's civil authority. That can also be covered. So it's important, just again, these are just highlights. You've got to read the policy. We'll talk about that more later. So I'm just kind of giving some examples here, but you sort of see the point. All right, other common first-party coverages that we see for lots of our clients, kidnap and ransom, right? So for clients that operate in areas where it's not as stable geopolitically and otherwise, you might buy kidnap and ransom insurance to protect your people. Control the well coverage for those in the traditional oil and gas upstream segment. You might want that to protect a well. Construction all risk, if you're building a new office, a new plant, a new facility, whatever, you might want to get some coverage for that. Reps and warranties, this is very popular in transactions these days as a way to, sort of bridge the gap between buyers and sellers, and what used to be they'd keep some money in escrow or things like that. Now we've got an insurance product that can step in, and it also avoids having to deal with claims between, company management if you keep them after the transaction, things like that. So reps and warranties is a nice coverage, and we're seeing it more and more these days. Not every transaction ends up with a reps and warranties policy, but just about all of them consider it. And the question is, is it right for this particular transaction? So it's really, that's a nice tool. We're helping lots of clients buy these policies and then deal with claims that come out of them. All right, so third-party coverages. These are not protecting the company's property and revenue and cost structure, but protecting the company against liabilities, right? So the main third-party coverage, you guys probably all heard it before, CGL, used to be called comprehensive general liability, and the courts said, well, if it says comprehensive, that must mean something, so therefore we're going to find coverage. The insurance company didn't really like that, so they renamed it. They said, well, we like CGL because everybody kind of gets that. What else could we use? And they said, commercial, let's call it commercial. So ask yourself, here's a thought, get back to your office, get back to your desk, pull up your contracts, look at your insurance procurement provisions. If it says that somebody, including maybe you, is supposed to get somebody comprehensive general liability insurance, then that contract probably needs updating, right? The magic of save as or cut and paste, it works great. It has automated our lives in ways that are too numerous to mention, but it's sometimes important just to go through and make sure that what you're doing, if somebody made this contract wording that you guys liked in your form contracts and then did it 25 years ago, that wording may need to be updated to keep up with the times, right? So if the first thing that someone needs to do to comply with a policy, with a contractual insurance procurement provision that says you're supposed to go buy comprehensive general liability insurance that hasn't been sold in the U.S. since 1986. So if the first step to comply with the contract is let's get a time machine, then you might want to ask yourself, probably time to update that. All right. A CGL policy then and now has 4 primary coverages. Bodily injury, that's what you'd think, right? Somebody gets hurt, slips and falls in your lobby or something like that. Property damage, this is, if somebody's stuff is hurt. And then personal and advertising injury. Personal injury these are the privacy related torts, right? This is, libel, slander, defamation, invasion of privacy, things like that, right? Advertising injury is what you'd expect when someone is injured by someone else's advertisement. It used to be, you'd see those ads. We compared our product to the 3 leading brands, right? And they would always say that without saying who they were. And it's because of lawsuits about that. And this coverage, may offer some coverage there. It has 2 primary benefits, the duty to defend, which is essentially they will pay for a lawyer to defend a lawsuit. Sometimes it gets into issues about who's lawyer, right, who picks them, and kind of what criteria should they have, what rates should be paid, and those kinds of issues, and we help clients work through that all day long. The other part of it is the duty to indemnify. This is essentially the obligation to pay for settlements or judgments in liability cases. So, and so again, 4 primary coverages, 2 primary benefits. There are others, but these are kind of the highlights. All right, other common third-party coverages are directors and officers, of course, in protecting company management, the board, the executive team, all of those, D's and O's. Employment practices, this is for most, sort of large organizations. They have a very sophisticated HR department, but occasionally still have situations arise, and this coverage is there for that. Pollution, environmental, depending on the nature of your business, may not really be such a concern, but for lots of companies, it really is a concern. And then most companies have employees, and so you have workers' compensation and employers' liability come in and protect, injured workers who are injured while on the job. And if it doesn't, for any reason, cover them, then you have employers' liability as sort of a backstop. So these are some common third-party coverages. And again, this list is woefully incomplete. It's just to kind of give some flavor for it. But the list is would have slide after slide. So I just picked a few to kind of highlight it. Sometimes you see package policies. Most of us have either a homeowner's or a renter's policy for your home or auto. Your car, for example, that's a perfect example of a package policy because it covers damage to your house, and it also covers if you have a tree that falls over on a neighbor's house, it'll cover that as well. So that's really a package policy that offers both first and third-party coverage. And again, you just have to work through it step by step to find out, what's in, what's out. Cyber is another example. Things like, they'll pay for the response costs, they'll pay for the law firm, the PR, the forensics firms to come in and figure out what happened, and also deal with, claims that come up, and so you'll see, coverages for that. Aviation's another one, and insures both the aircraft and liability from using it. Umbrella coverage is nice because if you think about, sort of your hand as having, these are, say, this is D&O, say this is cyber, say this is, your commercial general liability, workers' comp, and then an umbrella goes over all of them and kind of can fill in the gaps. And so it's also what I would consider to be a package policy. So again, kind of different policies have different flavors, but they're all built sort of the same way. So keep that in mind. All right. So prior to a loss, we talked about getting it right from the start. Well, the way that you do that is you review and evaluate proposed policies, right? Because now I'm, like most lawyers, I'm allergic to math, but the good news is this equation is written in words and I can read. I suspect you can too. So good policies tend to lead to good claims. Bad policies tend to lead to bad claims. It's really not more complicated than that. And that's why it's so important to get it right from the start. Now, sometimes I get questions from clients who say, well, Vince, we're trying to deal with this other company. We're signing this contract, and I've asked for them to share their policies with me, and they say they won't, or only under these circumstances, or whatever. And look, we understand that, and our job is to get in here and try and help you any way we can. But the truth is, the only way to be sure is to read the policy. Some people ask for certificates of insurance, and those help, but there is lots of case law that says you can't rely on them as a matter of law because they all have a disclaimer somewhere that says, look, this is just for indication, and it doesn't, if there's any discrepancy between this and the actual policy controls. And so what we tend to go with for our clients is we help them set up a risk-based framework where they have the right to audit, and that they do that on a randomized basis, just as you'd audit anything else. And then if they see indications that somebody is financially distressed, they have the ability to go in and ask for those policies for that reason as well. And what you tend to see is companies that suffer, that are under financial strain. Cutting back on insurance is one way that they can sometimes try to cut some costs out in ways that aren't really easy to see. And so that's why we always want to have that right where we can get it, and set up a risk-based framework to try and manage this, because otherwise you might need a floor of people who do nothing but look at policies every day. It's not a very efficient use of your resources, and so we try to approach it with, kind of what is the right balance here between, absolute certainty and cost effectiveness, and we hopefully try to kind of get somewhere on that spectrum. All right. I said good policies lead to good claims. Here's kind of how you do that. Read the policy for and against the insured. Read the policy for terms that give insurers bad incentive. Read the policy like the insurer's counsel will. Now, I never advocate self-harm, but what some people do is mash all their fingers in a door before trying to read an insurance policy, and that gets their head right. Again, I don't advocate that, but some people find that's a helpful prelude to reading it like the insurer's counsel will. Some examples. Let me try and add some clarity here. This policy, and these are actual real cases. I didn't make this stuff up. These are straight from the cases. Some of them are cases I handled. Some of them are cases that I just know about, from case law and that kind of stuff, but these are real world examples. So you see here, this insurance does not apply to bodily injury or personal advertising injury arising directly or indirectly out of animals. You think, okay, no problem. Except it was in a liability policy for a saddle club. This is a poor young woman who was hurt while riding a horse. She was very badly injured, and they sued the saddle club, and the saddle club's insurer said, well, horse is an animal, and we don't cover this. And now ask yourself, when this saddle club bought this policy, were they really thinking that this was going to protect them? I don't know. I wasn't involved in this particular case, but it doesn't seem like, it seems like there may be a disconnect there between what they were trying to accomplish and what actually happened. All right, here's another one. This insurance does not apply to bodily injury or property damage arising out of the conduct of or participation in or preparation for any parachuting activities. You think, okay, all right, fine. Except it was a CGL policy for an airport that ran a skydiving business. And so ask yourself, if we don't cover parachuting activities, anything, arising out of the conduct or participation in and preparation of parachuting activities, and what exactly is that policy covering? This is one I actually worked on. This is Kidnapping and Ransom insurance. And every one I've ever seen has kind of the same problem, right? And it's hard to spot, but let me break it down for you. Covered loss A is ransom. And then you see down in the bottom right-hand corner, you see death or dismemberment. So what they've done is set up an incentive where they will pay up to $3 million for ransom, but they'll pay $1 million for death. So it gives the insurance company a 3-to-1 incentive to not succeed on the ransom. Right now, I think that they're doing their best and they'll work really hard to try and bring someone home. But just look at the incentives here. The economic incentives here are not great. The worst I've ever seen was an 8-to-1 incentive. It was $250,000 death benefit and a $2 million ransom limit. And so they had an 8-to-1 incentive to say, I'm sorry, we did everything we could, but we just weren't able to bring him home. That's just not the kind of incentive you want to have in policies, and I don't know why they're structured this way. I really do think that I've never heard a good answer for this, but every one I've ever seen has the same structure, and it's something that constantly puzzles me. All right, never forget definitions. We talked about that earlier. Let's talk about it again. This is a definition from a policy. It's one of the cases I worked on. And you look at this and you think, okay, products completed operation hazard does not include bodily injury, property damage arising out of transportation, existence of tools, or products. Number 3, products or operations for which the classification in this coverage part or in our manual of rules includes products or completed operations. The problem is you don't actually have that manual of rules. That's sitting on some shelf somewhere at the insurance company. The insured didn't have it, and had no way to know what actually was covered or not because they didn't have that manual. All right. A more common version. This is one I saw recently, came across my desk. The exclusions is amended by the addition of the following. Any claim, so they don't cover any claim based upon or arising out of the violation of any other statute, law, rule, ordinance, or regulation that prohibits or limits the sending, transmitting, communication, or distribution of information or other material. If you would just take a step back here and think how many laws that actually implicates, it would take months or maybe years to actually read them all and understand them. Forget about, how to figure out if there's a claim. I mean, that is just so wide that, if I had to litigate this, I would ask a judge, honestly, just kind of throw this out for vagueness and over breadth. It just is too broad to really have any real meaning. All right, now this is a policy, every policy in Canada, or at least some provinces in Canada, has to have this sentence, but it makes you wonder. It says this policy contains a clause which may limit the amount payable, all right? So what if you get a denial letter that has 2 clauses, and they say it's not covered for reasons A and B? Can you get to go back and say, no, you said a clause, you didn't say more than one. And then they say, well, we don't cover it at all. Well, no, you said it may limit the amount payable. You didn't say it could completely exclude it. So, you just got to ask yourself, right? This wording is there, and and how might it work, right? Okay, so let's talk a little bit about the claims process. Again, we talked about, reading insurance policy terms at face value, you also want to read them for ambiguity. Sometimes at first glance it's not super easy to see, but you can find it later. Consider every way they could be read or interpreted. Let me give you some examples of that. This one was a policy I handled for a claim out of Superstorm Sandy. It was for a phone company. And this policy did not cover any loss or damage directly or indirectly caused by or resulting from any lack of the following services: incoming, outgoing, voice data or video. This was a phone company. That is all they do is sell people phone service. They don't do any other business at all. They don't do the alarm. They don't do cable. They don't walk your dog. They have no other businesses at all. And I said, all right, so if we take this out of your business, what is left? And they said nothing. So we went to the carrier here and said, look, we've got, some issues to talk through here. We can have 1 or 2 conversations about this clause. And they looked at it and said, look, you're a good client. Obviously, it doesn't really belong here. This is a relatively small claim. Let's work it out, right? So they just ignored this, put it aside, and they did the stand-up thing. And to the insurance company's credit, I give them credit for that. We had a great broker involved, too, who was helping manage this claim process. Broker did a fantastic job of, being the helping that dialogue. And so, it was a great effort. Now, this was a large company with a $5 million claim. If it had been a small company with a $50 million claim, or even a large company with a $200 million claim, I don't know how well that conversation would have gone. So it worked out fine in this instance, but you could see how that might be challenging. So, if you're looking at this before you buy it, you might go back and say, this should come out, which is what happened on renewal here after this claim. So again, I credit the broker and the insurance company in that instance. They worked together for the benefit of their insured, and so we always love to see that happen. All right. This one is a claim I handled. It was a piracy claim off the coast of Nigeria. It's an oil rig off the coast of Nigeria. And they brought most of the people on the rig into the safe room. A couple didn't make it before it closed, and once it's closed, there's no getting in or out. And so one of them got shot a couple times. It was terrible. And the other one got dragged ashore back to the pirate camp. And I thought, my gosh, and I got the phone call about this case. I thought, this is horrible. But then I found out that the guy that got dragged back to the pirate camp had been captured the year before, and apparently went back. And I thought, okay, maybe it wasn't so bad. Apparently they gave him a Netflix subscription and, you know, an Xbox and said, here, don't do anything stupid. We'll get a ransom for you and you can go home. So, I don't know. But what the insurance company did here and said, no, this is terrorism. And ask yourself why. Well, they said, well, terrorism in this policy means the use or threatened use of force or violence against persons or property, and when the effect is to intimidate or coerce a government, the civilian population, or any segment thereof, or to disrupt a segment of the economy. And I went and I talked to the insurance company's lawyer I've had several cases with in the past, and I said, you got to be kidding me here. This is anything. And I said, this situation, this piracy incident, it was terrifying, but it wasn't terrorism. This is just good old-fashioned piracy. It's been around for hundreds of years on the high seas. And this is in no way was this terrorism. They said, well, under our definition, it was. And I said, okay, so let me see if I have this right. So this is terrorism? So I asked him, I said, so, let's just go back to this. Suppose I go and I rob a liquor store, right? And I have a gun or a knife or any other kind of weapon, or I just threaten violence. You're telling me that's terrorism? And the insurance company's lawyer said, yes, that's what I'm telling you. And I said, okay, well, we're going to have to fight about this. So we went and asked the judge, and the judge said, there is nothing in the petition that says that work on the rig stopped. There is nothing in there that said, that the vessel workers were a segment of the population. So the court rejected the carrier's argument, held there was a duty to defend. Then we won the underlying case, so there was nothing to indemnify, and went on about our way. But just, keep in mind, a lot of people read through these policy provisions like terrorism. You read through the nuclear exclusions, the Y2K exclusions, things like that, and you think, I don't care about that. It's not what for me. But here, the terrorism definition was so broad, it really presented a challenge. We were able to overcome it, but not without spending, a fair amount on attorney's fees. Thankfully, Texas and some other states allow you to get those back for a successful breach of contract claim, so we did, but still a lot of aggravation for our client here, even though it came to a happy ending. And I thought this might be an aberration, but I'm still seeing these show up in different policies by different insurers. So it is something I commend to your study. As you're reading your policies, you might give it a quick look. And if you have any questions, call us. Happy to talk through it anytime. All right. This one is interesting for those in the D&O, dealing with D&O issues. So a lot of people know that a claim in D&O policy means a written demand for monetary damages, a civil proceeding commenced by service of a complaint, a criminal proceeding with an indictment, or a formal administrative, like a letter from a federal agency or something like that. So a lawsuit is that's number two. A demand letter is number one. But what about a PowerPoint? And here, this was a case where a company was invited to come down and visit with the SEC, at which point the SEC put up a PowerPoint that said, here's where we think you violated this law and that rule and this regulation and this is what we want from you. It wasn't a written demand. It wasn't a civil proceeding. It wasn't a formal administrative proceeding commenced by the filing of charges. It wasn't an indictment. But the insured said, look, this was the government asking, telling me that we were in their sights, and it felt to us like they were demanding that we do something to resolve this, or else, they were going to initiate one of these things. And so the court said, it's a fact question. We're going to deny summary judgment. All right, last example is this. And again, I mentioned earlier that when sometimes companies that are experiencing financial distress, one of the ways that they cut corners that aren't obvious to see is by reducing insurance. And one way to do that is to limit it to a particular premises. Sometimes you see these things. This is can be challenging. So what the way this worked was an engineering company with offices in Oahu on Honolulu worked on a bridge in Kauai, and the bridge collapsed, and so the insurance they filed a claim, and they said, no, this is a limitation to the designated premises. This only applies to these things arising out of the ownership, maintenance, or use of the premises shown in the above schedule. All right, and so the insured said, no, wait a minute. The Hawaii Supreme Court agreed with the insured and said, look, the injury and damage relate to the insured's use of its corporate headquarters to make negligent business decisions. We hold that the policy unambiguously provides coverage for negligence claims arising out of the insured's headquarters. So again, they made a decision here in Honolulu that impacted Kauai, but the court said, well, the negligence occurred there, so we're going to hold it covered. And that was a nice, creative bit of lawyering, and good to see the Hawaii Supreme Court receptive to that thinking. All right. How can the law help in making a claim? Well, it's important to remember the law when dealing with these things. The objective of an insurance policy is to insure. Courts should not construe policies otherwise unless the language clearly requires it. This is a little bit old. This is 1989. But here's a more recent case, 2008. It was 2003 under this opinion. The purpose of an insurance company is to indemnify its insured. So these things get lost in the debate, The lawyers that we go up against, when they walk in, they're like, well, Your Honor, we need to unpack this, and we need to take this one piece at a time. And they talk really softly and really slowly, and they make it seem like this is no big deal. But it's important to remember and not get lost in that kind of debate about the purpose of an insurance policy and the purpose of an insurance company, right? And so we always cite these cases to kind of refocus courts on this is sort of what's happening here, and I think it's easy to have this get lost in the debate, and it's important as a reminder. All right, how do you deal with this stuff from the lawyer standpoint, right? And the first stop is to work with your risk management group hand in hand, work with your broker hand in hand. You should also work with your coverage lawyer hand in hand, because the insurance companies do that same thing. They have the same team. You need a team just like theirs. So initial steps are to assess coverage, notify the carriers, assemble the right claim team, assess and quantify your losses, track your costs, preserve carrier rights like salvage, things like that. Let them come in if they want to inspect things. If they ask for copies of books and records, give them to them. At some point, it's always, sometimes you find yourself in an endless series of more and different requests, right? Every time you give them 6 things, they ask for 7 new things. At some point, we just say, look, enough. You've had enough. But usually, at least the first few rounds, we kind of grumble and complain about it later. There's no reason to give the insurance company one more argument against you. So, complying with it is the safer choice, even despite how frustrating it can be. You also need to keep in mind things like proof of loss. They may ask you to, fill out a statement quantifying it and verifying it. Contractual limitations periods in Texas, anything shorter than 2 years is unenforceable, but in lots of other states they will enforce shorter limitations periods. Appraisal is a way to value where you have disputes about valuation, and it's a good mechanism for that. It's like ADR. Doesn't really go to coverage, but does go to valuation. So, these are things to think about. Liability claims, kind of the same. The first half of it's sort of the same. Assess coverage, give notice, cooperate, look at, denials and reservations. One thing that they try and bury in letters we see a lot is, well, we reserve the right to seek reimbursement of any costs that we pay that it turned out aren't covered. Well, unless they have a policy right to that, some states will give them that right. California is one, but Texas is one that won't. So unless there's a right in the policy, it doesn't count. They can't make one up in a reservation letter. So what we typically do is write back and say, look, you've asserted this right. Tell us where in your policy that comes from. Maybe we missed it, but show us. And if they can't point to anything, then that conversation is kind of done at that point. You need to look at other insurance issues, indemnity issues, things like that. Again, and if you have multiple claims, one of the other things that we tend to focus on, since lots of our clients come to us for very significant liability claims, lawsuits, litigation, that kind of thing, is we try and make sure that what we're doing on the coverage side coordinates with the strategy on the underlying defense, right? Because we don't want to be arguing one thing on the coverage claims and another thing on the defense side. Those two need to fit together. So keep that in mind. All right, litigating coverage disputes, choice of law and forum. These are things to look at. Sometimes they are decided by your policy, sometimes not. Declaratory judgment is a way that both sides can file to ask a judge to make a ruling on rights and obligations under a policy before or after a breach. Burdens of proof is really important. Usually the insured has the burden of proving a covered claim. It then shifts to the insurance company to prove an exclusion, shifts back to the insured to prove an exception to an exclusion. Sometimes policy wording will try to modify that, but these are things we keep an eye out. And then extra contractual claims like bad faith and prompt payment. Texas actually has very robust extra contractual protections. Not every state embraces that approach. Some of them say this is contracts between sophisticated companies. We don't need all these things, but we think they're important and we think they make a difference. So it's something to keep in mind here. To some degree, sometimes you can sort of plan for this and sometimes not, but something to think about. All right, additional insured issues. After Deepwater Horizon, I was lucky to represent one of the owners of the well, and all the owners of the well teamed up and tried to pursue Transocean's insurance. And the Texas Supreme Court finally came out and said, no, look, here's how we're gonna deal with this. If your contract, requires incorporation of the policy, then we're gonna look to it. If not, then we're not. And so here are 3 post-Deepwater Horizon cases that we have here. And if you look at the center column in this slide, honestly, they aren't that different. But what you got was sort of 3 different outcomes. And everybody can have a copy of this presentation when we're done, so you don't feel the need to study it or screenshot it or anything. You can see it later. But keep in mind that, again, this looks like 3 pretty similar provisions, really hard to find a lot of meaningful difference, but the court came to 3 different outcomes, and that sort of tells you that the law here is not real settled yet. So something to think about. Now, again, maybe for those of you who liked our Scrabble tiles at the beginning, some people are graphically inclined, so I offer you this as the best way I can think of to talk about other insured issues. These 2 cats, they are very civilized cats. This video goes on for like 6 or 7 minutes. They never spill it. They never swat at each other. They gently pass the bowl of milk back and forth to each other. And this is like the insurance policy. I bought it. Well, I know, but you told me that I was covered under it, so my claim is bigger than yours. And I mean, and again, I just had a 20-second clip here, but it goes on again. I mean, it goes on for minutes. And again, these are the most civilized cats I've ever seen. But this is kind of the graphical way to think about additional insured issues. Now, if you look on the kind of right-hand side of that picture, there's this really strange looking mouse. I haven't figured that one out yet, but in any event, we'll play it one more time just because it's fun and it lowers your blood pressure. But here you go, and so this is other additional insured issues, and just kind of you got to think about this and imagine that's your policy. So. All right, and some of our clients get these rights, some of them give these rights, some of them do both in the same contracts, and you just, from our standpoint, we're lawyers who are here to help our clients deal with these issues. We don't really care where our clients want to end up on them, as long as they figure out, look, if you think of it as a continuum, if they say we want to end up here, then that's fine. Let's get your contract wording and your policy provisions to drive to that outcome. And if you say I want to end up over here, that's fine too. We'll support that. Let's get your policy wording and your contract provisions to drive to that outcome. We just want to make sure that our clients think it through and come to a considered conclusion, and then try to implement that and make sure that they're getting where they need to be. What's really challenging is when these things aren't fully considered, and you might end up with a surprise that's very unpleasant. All right, winding down here, because I know this can't go on forever. Hot topics. Let's talk a little bit about D&O coverage. Here's a few developments. I'll start with the bottom one first, because that's naturally how you should go through a list. Is you start with the hard market, right? This was happening before COVID. The insurance industry had been giving away coverage for years. They thought they didn't think they were getting fair value for it. If they had 1 or 2 claims go south on them in a given year, it could blow up an entire book line of coverage. And so they really felt like they needed to reprice this arrangement, and they started to do that, and then COVID just kind of blew it up from there. Now, kind of moving up our list, Delaware courts have now become more receptive to oversight claims. Here's a few cases here. Oversight, by the way, is an ambiguous word. Oversight can mean that I'm literally overseeing something. It can also mean an oversight like didn't see it, which is an interesting thing to think about in these kinds of claims. 9 West is an interesting case. It said that prior directors and officers may be at risk for future events. So if you don't, if you sort of set up a company to fail, that can trigger liability on the prior Ds and Os who were watching it when that happened. And then finally, coverage for appraisal actions. This is currently on appeal, and the law has changed, so I'm not sure just how relevant this is today, but if you have a leftover appraisal case, maybe there's some thought about coverage here, something to think about. All right, reps and warranties coverage. I have two topics to talk about here. There's a really fascinating subject of coverage, and happy to talk a long time about just it. But two things I want to just highlight. One is the working capital adjustments. They all have an exclusion for working capital adjustments. They're all built this way. And what they say is, look, you work out your deal, and then you have your closing, and then after closing, you come back and say, okay, what was the working capital, and how much inventory did I have, and how much cash did you have on hand, and then they sort of settle that up, right? And the insurance industry says, well, look, whatever your deal was, if that impacts the claim that you're making under the reps and warranties policy, we want to deduct for that, so you don't have a double recovery, right? And which is, understandable, fine, I get it. The problem is that sometimes that's not so easily figured out, right? So one case that we're handling, the insured just worked out a deal over a phone call, and there was no allocation. It wasn't allocated to any particular aspect of it. There's no meeting of the minds on any particular topic, or if so, how much. And so I would encourage you, as you are doing post-closing transactions, you might think about that. In our client's case, it was an accident, but happy accident. But you could, you might think about that as a way to deliberately, focus on sort of how that might impact any reps and warranties claim you might make. The other one is ADR provisions. Lots of these policies have ADR provisions. We don't really think that's fair because we like ADR generally. It's really useful in lots of instances. This we just don't think is one of them, because it creates an asymmetrical information situation where the insurance company has better access to what claims were brought, how they're decided, and what, if anything, was paid. And insureds, it's kind of a black hole. You can get good information from your brokers sometimes, but even they don't have access to the full suite of information. So we think that's not great. We'd like to see more of these be litigated in open courts so that everybody can kind of get guidance from it, as opposed to just the insurance industry getting guidance from it. All right, winter storm issues. This is a rare sight in Texas, but a lot of it looked like this. There was a Texas-sized sheet of ice a few weeks ago, and lots of our clients are still dealing with this, so we'll talk about it real quickly. We talked about service interruption. This is when utilities are interrupted. It differs by policy, and sometimes you got to look at, what is the coverage trigger. You got to look at qualifying periods, waiting periods, things like that. But that can be covered. Contingent business interruption. A lot of our clients said, look, we were really lucky. We didn't have much loss or damage. But if your customers or suppliers were impacted, then that might translate to impacts to you. And dependent properties, it's kind of the same thing. Think of the boardwalk in Atlantic City, right? It brings people to those businesses, and it's kind of a variant of contingent business interruption. Civil authority, we talked about that. Is it a guidance of we want you to stay home versus an order you must stay home? Sometimes policy wordings can vary on that. Geographic limitations, usually it's limited to 5 miles, 10 miles, something like that. Ingress, egress, we talked about. But I want to focus on preservation of property. This is lots of our clients had extraordinary power bills when the price of electricity in the open market went from about $30 per megawatt hour to $9,000 per megawatt hour. It became really expensive for our clients really quick, and they had really no choice but to continue to incur these costs because they needed to use some minimal level of power to prevent freezing and maintain their assets in a safe state. You also saw it in the Texas Medical Center here in Houston when the water supply went down. Lots of these healthcare organizations were trucking in water so that they could continue to service their patients and their employees. And it's hard to, you can't do surgery without steam to sterilize instruments. You can't make steam without power and water. And so when you lost both, they had to really scrounge. And so normally in these kinds of claims, you look for physical damage, you look for revenue impacts. Those are kind of the two things that you focus on. But the third leg of the stool is cost impacts. And that, turns out, for several of our clients that we're helping out of this incident, is the single biggest component of their claim. So something to keep in mind here. All right, sublimits, number of occurrences, things like this. One thing that ERC people are referring to it as Winter Storm Uri. That's made up by the Weather Channel, which is, they're free to come up with names if they like, but it's not an official name. Usually, it needs to be NOAA or the National Weather Service or things like that. So don't pay any attention to calling it a named storm. Not only is it not really a named storm, it's not a windstorm, so that shouldn't really be a factor. Things like stacking, usually if you have multiple coverages, you can stack them in the absence of language in the policy that says you can't. Most courts will allow it unless the policy prohibits it. And sometimes coverage extensions that can trigger coverage for other coverage extensions. And so again, we look through these policies very carefully to try and help our clients think through this. How do we optimize our claim? How do we maximize the recovery so that they can, get the best recovery and help get back on their feet and get back with their business. A couple other things, you've got to think about, other impacts, and the insurance company will talk about these things. And again, there's case law on these issues, so we'll help you walk through it if you run into it. Proving damages, you need to think about evidentiary issues. How do we prove? Well, the good news is that just about everywhere in Texas froze and the roads were impassable. But, you want to create a timeline, and that way you can figure out, when you had losses and these waiting periods and things like that. All right, I talked about preservation and protection of property. This is an example. This is from a publicly available policy lots of our clients have. Really, you can skip the top half of the slide. Just read the bottom. Sue and labor expense means expenses reasonably and necessarily incurred by the assured for the preservation and protection of property covered under this policy. That's it. It's just, did we spend money reasonably and necessarily to protect property? As simple as that. And if you did, then you may have coverage for that. So if you had huge power costs to prevent freezing or maintain water circulation in your fire suppression systems, for example, right? It's hard to put out a raging fire with ice cubes. So these are all things to think about, and there may be a claim there. You may not have thought about it in the first instance, but it could be after further reflection that some of these costs may be covered. Takeaways. You've been a very patient audience. Thank you very much. By the way, whatever questions you have, if you haven't been putting them in the chat box already, please do, and I will answer every single one of them. I will also tell you when you're done here, you are free to call or email anytime you like. Always happy to chat through these issues. But you've been a great audience, so I told you you're going to get takeaways to keep and treasure forever. Here they are. The first one is you get 1 hour CLE credit. That's now yours to keep and cherish. 2 is you get 10 tips for handling insurance issues. Here they go. Number 1, read the policy. This rule is important. You've heard me say it before, and now you heard me say it again. It's rule number 2. Read the policy again. Can't stress this enough, folks. It really is the difference maker here. Number 3, loss prevention is best, but loss mitigation is the next best thing. So if you can't avoid a loss, see if you can get somebody else to pay for it. Usually doesn't hurt to ask. Normally when placing coverage, doesn't hurt. Sometimes we might militate against, asking for something else from the carriers when we're placing coverage. But again, work with a great broker, and we can talk through those issues when they come up. Review new policies when they arrive. Remember the one about the, we don't cover the phone, right? If that had been reviewed during the placement or even after it arrived, that might have been avoided, right? Additional insured status, treat the coverage like it was your own, because it turns out additional insureds are, well, they're insureds. So it's important to keep that in mind. Keep the policies, because it's hard to prove a claim under a policy if you don't have it. Turns out there are ways to prove lost policy cases. The law exists on this, but it's easier if you can just say, here's Exhibit A. All right, comply with the policy. Your coverage may depend on it. Things like notice, right? Environmental policies usually have very strict notice reporting requirements, and these are things that you've just got to deal with. You got to stay on top of this stuff. Never assume there's no coverage. Don't ever think that. Don't think, it's probably not covered. If you do think that's okay, don't beat yourself up over it. But if you do think there's no coverage, then don't assume it. Verify it. And when you think there's no coverage, look for another route. Sometimes you just may find it. All right, last thing, we have started a podcast here at Bracewell. It's Bracewell Covered, and it's the Insurance Law Podcast for corporate policyholders. So if you're having trouble sleeping at night and you want to be lulled to sleep with, fascinating dialogue about insurance law, we've got a great lineup of guests. We started with the former general counsel of a Fortune 500 company. We work with a lot. We're going to have risk managers. We're going to have brokers. We're going to occasionally get our carrier friends on the other side. So it'll be carrier side lawyers. It'll be people who work at carriers. It's going to be again a bunch of great guests, and hopefully that'll be cool. So this will be taken over iTunes and the Google Play Store any day now, as soon as we launch it. But stay tuned for that. It's going to be awesome. And with that, thank you very much. What you need to know about insurance, you can get it right here on this slide. There's my name, my phone number. You can find me at vince.morgan@bracewell.com. Happy to talk, answer any thoughts or questions. And again, if you have put a chat question in there, we'll respond. And if not, just shoot me an email or give me a phone call. I always love to talk to you. Thanks very much. Goodbye.